Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Great to be with you. It's not how you open, it's how you close. We're going into the last half an hour basically of trade here today. Let's not waste any time and get right to that corn table to see how things are shaping up here for the last half an hour. We're down 9.5 cents in Sep corn at 5.49 and a half, and we've got December down 8.5 cents at 5.50 and 3/4. That would be the new crop. How about soybeans? What do we have happening in that soybean market? Much the same, actually, but a little bit more amplified. We've got August down 28 3/4 cents at 13.90 even. About a dime off the lows, though, so we have come back a little ways. We've got September off 31 3/4 cents at 13.24 and a half, and Novi new crop beans down 33 cents at 13.20 and a half. How about the wheat market in Chicago? Chicago wheat down 4.5 cents in Sep at 7.25 even. December's down 3.5 cents at 7.35 and 3/4. How about Kansas City? Kansas City wheat. Here we come. Staging a comeback here. Up 2 cents in September at 7.05 and a half. Still 6 cents off the highs, though. So December's up 2 cents as well at 7.16 and 3/4. Again, another 6 cents off those highs as well. How about Minneapolis? Minneapolis spring wheat down 6.5 cents in September at 9.16 and a quarter. We've got December down 7 cents at 9.04 and a quarter. And then lastly, let's take a quick peek before we go home at the cotton market. Cotton up 8 cents in October at 90.15, and December's up 41 cents at 90.04. Joining us today, we're lucky to have Ted Seifried from Zaner Ag Hedge. Ted, welcome to the show, a good friend of the show. That was a lot there. We've gone through the grains and oilseeds. We've been kind of around the block here today. What do you think about the market action so far?
I mean, this is all soybeans, Scott. And, there was a surprise increase in conditions yesterday afternoon, and put that together with a little bit of a more favorable forecast, and down we go. Now you have this, the soybeans, November beans, trading below the 100-day moving average, which we've done before and we've come back from. However, this chart has a little bit of a different look to it than the last few times we've done it. It's been a while since we've made new highs. That was or early June. This really feels like we kind of want to roll over to the downside. And as we have talked about at length in the last couple of weeks, Scott, there were two ways that we could go find demand, which is something that has become a growing concern in the market. And one of those ways was scaring, fear. It was scaring China into buying soybeans based on a hot and dry forecast and concerns about whether the crop would be there or not. That hasn't happened. The other way is greed, i.e. lower prices, or the demand hunting expedition, as I've been calling it. And it feels like we're on the verge of something like that. Now, ultimately, I think that demand is there. Ultimately, I think we have a very bullish scenario for soybeans for the rest of the marketing year. Once we find that demand, we're going to say, oh, maybe the production wasn't quite there, and we actually have a tighter balance sheet than what we were looking at last year. And that could open the door for prices to go up as much, if not higher, than where we saw the July beans trade earlier in the year. But the market seems to want to prove that the demand is there one way or the other. And that's kind of what's going on. Corn and wheat don't really feel like they want to go sharply lower here for me. And a lot of that is because of production issues that we've had for wheat here in the US and production issues that we've had for corn down in South America. But this is a soybean day. This is soybeans being heavy, and it's kind of pulling everything with it.
Yeah, I like what you had to say. I agree, both technically and fundamentally, the 100-day moving average, and then obviously with the forecast and what's been happening. But I also kind of think that the market got a little complacent, and some weak longs weren't getting their bang for their buck, and they just finally had to bail because it just wasn't working out for them. I don't know where you stand on that, but there does seem to be a little bit of a, I don't know, the trade feels like it's given up a little bit to me. That's why I also feel like we're a little bit lower, but we'll see. But I don't know how short you want to get in front of that August report, right? And I think that's pretty important. So we'll take a quick break, Ted. That was all great stuff. Your content is awesome. Thank you very much. We'll be right back. Talk Livestock with Ted Seifried after this. Welcome back to Market Day Report. I'm Scott Shellady, going in to the end of the day here. Let's see how the cattle are faring. They close, just a few short minutes from now. Live cattle up 95 cents at 123.07. That's in the August. October is up 72 cents at 128 even. How about feeder cattle? Do we get a bump here from any of these inputs being cheaper? A little bit, but look, this is kind of disappointing 62 cents higher in August at 158 spot 87. September up 42 at 162 spot 40. In October up 45 cents at 164.92. And how about lean hogs? What are they doing on the day? Here we go. Finally getting some good gains going. $1.47 in that August contract higher at 108 spot 97. We're up 1 spot 62. $1.62 in October at 91 spot 12. And December up $1.12 at 84 even. Joining me again, coming back in, is Ted Seifried from Zaner Ag Hedge. Ted, make some sense out of this livestock for us, will you? The cattle and hogs.
You know, I'm going to go with you on the idea that the feeders not being stronger than they are because, you know, corn is down. That's a little bit disappointing. And you like the idea of, you know, feeders are the leaders. And today is not much for being leaders. And you like the strength that we're seeing in the live cattle, fat cattle as well. But it's really kind of faded as the day's gone on. So not a super impressive day from cattle. We're still stuck in this range. I don't see a reason to break out of it. It's just more of the same for the cattle. Now, the hogs are a different story. Really like what we're seeing here as we're getting into the close on hogs. I like that October contract back over 91 again. I'm getting excited about the hogs again, as long as we don't get ASF here in this country. Obviously, that's been the concern. That has to continue to be a concern. But until that happens, domestic demand is really good. Our export demand has really picked up. As ASF spreads, that just means there's going to be more demand for our exports. I think our animals are going to be a little bit light, both on numbers and on weights by the time we get to the end of the summer into early October. I really feel like there's more upside potential. I think 106 to 108 minimally on that October contract, as long as we don't get ASF here in the United States before that happens.
Yeah, that would be a black swan for sure. And I also think there's a little bit of a wind beneath the wings of these markets is that the Fed's been dovish, and what we've seen happen today in the markets, I mean, they've been all over the place. They're very, very sensitive to maybe new mask mandates or, you know, vaccine passports and the likes, and then shutdowns, lockdowns. All of those things have kept the Fed pretty dovish, and they're continuing to flood the market with dollars. That's keeping interest rates low, which is great for loans and purchases, but also keeps the dollar cheaper.
That dollar has reversed higher here today. Yeah, the dollar is looking like it's not believing it, though. That's a concern for commodities as a whole. But even if we do lockdown again, people are going to still want to eat. We learned that lesson last time. If they're not buying it from restaurants, they're buying it from the grocery freezers.
Well, you're right, and that will be a concern. We'll see how that happens, but going forward, it'll be interesting to see, you know, what happens to that dollar. You know, interest rates are low, with the 10-year yield is plummeting as well. So I'm gonna leave that one open for discussion, and we'll pick that back the next time we're on. But that's Ted Seifried from Zaner Ag Hedge. Thank you very much, Ted. I'm gonna hand it over to Tammy.